Okay, welcome back today. Class number, I believe it's number 9, virtual. Hopefully everybody got that message today. Sorry about any confusion about that. Who has any thoughts, questions, comments on the curriculum or anything up to this point? Everybody's good? Everybody's clear? Wow, there's a trip around the world. Um, okay, so let me then, obviously today, February 10th, week number 9, really gonna just kind of give you a wrap up of the financial management part. I'm gonna show you kind of a case study of a restaurant. We're gonna go and do a little bit of a study of what that looks like. And then just kind of go over some of the key concepts that we've talked about before, some that may be on the exam, that kind of stuff. I'll give you an idea of what's going to be there. No alcohol prep. That's an old slide, but no alcohol prep. That's what we've been through already. Any other questions on that? Okay, let's get into the other one. So I know we talked a little bit about the profit and loss a couple classes ago. But we want to talk about a few things in the profit and loss arena when you're potentially managing a restaurant or a facility, what you may have to look like, right? Some of the things that you have as far as controllable income, a thing called occupancy cost, and some conclusion and insights on that. So core competencies, there's 3. If you ever own a restaurant or run a restaurant, that independent owner and management team must have to create a sustainable and successful profitable restaurant business. And they are, 1, your systems. Your systems have to be really good, right? Because you can't be there all the time. So you want to make sure that the people that you have in place, your staff, your management team, that they can run without you being there, right? That there's things in place that they can go to find out what's going on, or that you've trained properly on that. So implement and maintain effective systems. Certainly building that strong positive culture. We've talked about that before, as well as developing good business skills. And that includes at least having some tertiary financial skills. And again, you don't have to be an accountant. Many of my owners and any of my businesses that I coach don't have an accounting degree, but at least some working knowledge of how the financials work about your particular business. So first and foremost, your effective systems, right? Really kind of, this is to take place while you're not there. So organize the operations, provide customers with consistent, reliable guest experience, that type of thing. So again, the more consistent you are, the more that clients, your customers, can expect a pretty consistent type of experience that they have with you, right? Building a strong culture, right? And this goes right from hiring, making sure that your staff is the best staff that you can hire. And then once you have them on staff, making sure you're fostering teamwork, ensuring that excellent and provide excellent guest care as well. And then business skills, critical for controlling cost or expenses, making sound, good decisions based on that, and ensuring any adequate profitability, because that's, at the end of the day, what we're all shooting for going forward. So we've talked a little bit about the P&L statement in the past, so I just want to do just a quick overview as a review. It really is the cornerstone, but remember, we've talked about this before, is that it's a report. It's something that has already happened in the past. So we've collected the data, put it in some type of a format, and it's over the last week, it's over the last 2 weeks, month, quarter, year, regardless, but it's always something that's in the past. Okay, and so we can use this as something that can help us predict and forecast the future. Using it, obviously, we can use it to in just about every area of the business, but it can certainly make a financial impact on marketing, certainly help us make our decisions here. Any training that we need to do because maybe something's lacking or an expense is a lot higher than it should be, helps us with the purchasing and certainly the daily operations, right? And as well, it can also be a tool that can help assess performance. So what we have when we use the word accounting, yes, there's some accounting that we use, but it can be a system of measurement that really helps us with our decisions and really turns our activities and decisions into numbers. And at the end of the day, it really helps us understand what the true performance of our business is. In there, we know that there's three undeniable truths, right? If we are measuring something in our business or in a restaurant or our facility, it usually gets managed, right? So if we're always looking at specific numbers, we're trying to improve those numbers. Typically, not always, but typically that particular area of the business gets managed, that we're looking at it closely and we're trying to improve efficiencies and those types of things. When it gets managed, for the most part, things improve because we're trying different things, we're trying different tweaks, we're trading better and that type of thing. And then the profit improvement begins with measuring those key activities. So the key takeaway here really is that your profit and loss statement measures the results of decisions and activities, highlights the areas that you can improve on, and then helps manage your restaurant or facility more effectively, and at the bottom line, more profitably. So we're going to just go through a fun kind of a case study and kind of understand a little bit what people look for when we're looking at P&L. So certainly can help make us have better decisions and guide us to operational success. So an area that we're going to use is we're going to understand in this particular area, and not necessarily on the test here or exam, but understanding sales per square foot and P&L formatting. We talked a little bit about this last time. So kind of analyze a restaurant P&L. I don't know about a financial wizard, but you'll be have a little bit better insight, right? And gains insight on performance, potential profit, and where attention is needed through a real world case study. So the case study is this. So Bob has hired you as a general manager. You've had so much experience as a general manager. He's hired you to kind of look at his Italian cafe and help him understand better the financials of his business. So Bob's an owner of an upper end casual full service restaurant. He has 130 seats in about a 4,000 square foot leased space, and it's busy and it's profitable, or at least we think it's profitable. So he seeks your expertise to evaluate whether his restaurant's profits are maximized. Is he making use of all the area that he has going forward? So you're on the hook for this. So where do we begin? Well, really, certainly the key metrics in any facility, we've talked about this already, and that is we want to understand what your food costs, your labor costs, your guest counts, and the check average. Those are the biggies, right? And food costs, remember, can include your beverage costs there. So your prime cost, which is food, beverage, and labor, remember that. And then how many guests are coming in on an average basis, on an average day, and then what's the average check? And then we can break that down, average check during lunch, average check during dinner, and if you serve a breakfast menu, certainly that as well. And then at the end of the day, we're all going to focus on what our sales per square foot is, because we know, you don't know right now, or maybe you do, but I'll have these numbers for you, and that is, we know what the end industry standard is. So sales per square foot, we calculate the sales per square foot of a facility, really by taking the sales and divided by the total number of square feet that you have. So if we do that, we know typically, not always, because it couldn't vary depending on the type of restaurant, but a full service restaurant, the average for sales per square foot between $150 to $250 per square foot is about break even for a full service restaurant. Moderate profit is about $250 to $400 square foot, and then strong profits over $400 per square foot. And you're doing really, really well here. And obviously things are efficient. The staff's working really good together and that type of thing. And if we're talking fast food or quick service, that requires higher sales per square foot due to the different cost structures and those types of things. So again, there's completely different data for those two types of entities. So we got the for the full service, for break even, moderate, and strong, and then we got the quick service that will be a different aspect. If Bob's annual sales is 1.6 million and his restaurant size is 4,000 square foot, his pretty easy here. the sales per square foot is 400. So 1.6 divided by 4,000 is $400 per square foot, right? And the expected net income, our profitability at 400 square feet is 10%. That's what he expects, right? Or excuse me, that's what the industry standards expect. What he's currently getting is actually 4.4%. So something is not quite right. And so what's causing the gap? Why can't he maximize his restaurant to give him some income at about 10%? Again, that's very significant at 1.6 million. Okay, so we really want to hone in on why this gap is about 5.6 percentage points off. What could we be doing, right? So we have to go back to go forward. So we really take a look at his P&L. And again, the formats that we've talked about in the past, food and beverage sales, right? Your prime costs plus your payroll. We want to understand what your controllable expenses are, because those are the ones that we're going to have most of the impact with. The ones that are not controllable are expenses that are up every month, our lease, our utilities, those types of things. We can't do much with those, but the controllable ones, we can make some adjustments and potentially increase that net income. And so we also have the non-controllable stuff, and then net income before taxes, right? So our standard format, right? We have two different types. I think we've shared some of these before, is that when we did look at some of the P&Ls, they can be extravagant, something like that, where we're trying to really understand and know all the categories. It can be really basic, something like that. But what we really want to make sure is that we got our handle around it and doing it at kind of what a good standard restaurant P&L format, with where they pull out sales, our cost of sales, and our labor, and that gets right down to prime cost. And you can see down here, we have that pulled out specifically so that we can look at it at a glance, so that we're not mystified or we have to do the math each time. We've pulled out the prime cost, that type of thing. Now, this particular P&L is not necessarily Bob's Cafe, but I just want to, again, review the different types of P&L formats. They're all over the place. This one here represents the best type, especially for a restaurant, because I pulled out the costs that really matter to me going forward. And we can do this for per square footage and all that kind of stuff, that type of thing, especially if Bob wants to do that later after you've solved his issues. Questions, comments there? Okay, so once we get that P&L in the right format that we want, we can start putting the numbers in there, right? We want to explore how to identify the cost anomalies and optimize Bob's profitability using that right P&L. So making sure that things are as simple as we can. So we got to understand those key checkpoints and improve the profitability, right? So maybe some of the first things we do when we look over a P&L is we want to make sure that we understand the format discrepancies, right? We want to understand the different calculations for cost of sales, whether food costs, is it including the beverage cost? Is it all together? Are we using just food costs when we're doing the percentages? Again, making sure that everything's consistent here. So we want to make sure that our P&L follows the industry standards for accurate analysis. Our guidelines, remember, prime cost equals cost of sales and expenses, including all the benefits. So that's not just the hourly and what we pay to employees, but everything's included. So cost of sales, which include the food and the beverage, as well as our labor expensive. And remember, we talked a little bit about this, didn't spend a lot of time on it, but for a full service restaurant, prime costs should not exceed 65% of total sales. Maybe you're looking at that as a general manager or people that are in charge. If you ever get in this type of situation, you'll want to know what the target is for your prime cost. And it certainly can be lower than this, but you don't want to exceed much higher, because 65% doesn't leave a lot of percentage points left to make sure that everything else is handled. Okay, questions, comments here? Fun fact, Adam sends, Apple's average sales per square foot is 5,500 to 6,000. Holy Moses. I won't read. You can read Suzanne's reply in there. And then Samsung's average sales per square foot is $5 million. Holy man, I didn't know those things. Somebody's been doing some good stuff. Looking at that stuff. Good job. Okay. Some fast foods, they aim for a maximum of 60%. So a little bit less for your prime costs here. And again, they have different things. They have more paper products, that type of thing going forward. So again, just different. Profitable restaurants achieve, real profitable restaurants between 52 to 55 cost in full service, and then 50% or lower in quick service. And that means that your efficiencies are down. Everybody's just got everybody's back and things are running really smooth and that type of thing. Thoughts, questions here? Okay. I don't know who's on the said that here that food trucks are profitable. I gotta believe that a lot of that is profitable because of the overhead and the fact that they're so small. Yeah, the same things are involved here. Your efficiency's got to be good, right? Depending on how many employees you have for the food truck, the operation, and those types of things. But again, it can be. You just got to have your stuff down. We've talked about this in the past. What are the controllable things? Profit before rent, property taxes, and other fixed costs, right? Controllable income. For full service, again, 65% of expenses are your prime costs. This adds on top of it. This is the income. Sorry about that. So your full service, you have a minimum of 15% of total sales. So you want to make sure you're understanding there. And then quick service, you want a minimum of 20% of total sales. So this is your controllable income, the things that you have that you can make have an effect on going forward. So 15% for full service and 20% for your fast food quick service. So an example, Bob's Italian Cafe actually achieved nearly 24%. And so he's blowing it out when he's compared to his contemporaries or the industry averages, right? So if his industry average is about 15, he's up in the mid 20s, which is great. So that might not be a situation to where, some other places that we have to look, but his controllable income looks really good right now. Some occupancy costs. Let's talk about that. What does that mean? So that means the place that you're at, the place that your restaurant or your food truck's at. How much does it cost to maintain that structure, that facility? So your occupancy cost is going to be your rent, plus the insurance, plus any maintenance, area maintenance that we have to worry about going forward. Okay. Your industry average, your building, your facility is about 7 to 10% of your total sales. So again, this is what you would add to your expenses on that prime cost, 65%. So another 7 to 8% would be your occupancy costs. So a little bit more of your expenses. If you have your occupancy costs up to 10%, it's manageable at that point. But if you get any higher, then this can be problematic. So we need to make sure that the place that we move into or the place that we're at is that we don't have issues. High maintenance costs could be in it a thing. The landlord raises the rent or your insurance goes up dramatically because of events or whatever the case may be, because there's so many different variables. So when we look at Bob's Italian Cafe, it's over 14%. And it's certainly starting to eat into that profit. Remember, he was looking to have a 10%. He's at about 5.4. This could be the area, but let's take further look, right? So strategies to address high occupancy costs. So what we're looking here is sales per square foot, right? We've already talked about that. The prime cost, major combined expense category. Our managerial performance metric, which again, sounds like Bob at 24% is controlling that pretty good, but his occupancy costs, major fixed expense impacting his profitability. So what can we do to help that? Certainly other things that we can look at is that we can speed up our table turns, right? Getting clients in and out faster. We can have some effect, but we can't have a huge effect on here unless we're doing something very, very wrong. We can optimize your table configuration. Can we get more people in our dining room? You have to be careful here because we don't want to, get people jammed in too much. We need flow for wait staff, and people to be comfortable eating lunch, dinner, or breakfast, whatever the case is. So we want to make sure that if we go ahead and optimize our table configuration, that we don't jam too many people in, or it's not efficient for wait staff and that type of thing. Potentially, we could explore other services such as takeout, which many people did during the pandemic, delivery and catering options. Those are all different areas that contribute to that bottom line income without increasing, at least largely, your footprint or your space. That would, have an effect on your cost per square foot. So again, maybe you look at other things as far as that goes. Maybe you'll also enhance your marketing activities to get more people in to your facility. This could be an option, but it's not going to be as easy, and that consider location, and then potentially maybe the concept alignment. Maybe you change your theme or other aspects of your concept and how you deliver the food and what the ambiance is and that type of thing. So again, more drastic steps here, but things that you may consider. So again, we talk about looking at the numbers. You don't have to be an accountant, but some of the accounting is good, right? It certainly helps in making sound financial decisions. It takes some of the guesswork and scariness out of it when we're talking about those types of things. And understanding your P&L financial statements can improve your business management. I mean, overall, it can be a little daunting. We know that, I'll just flash up here, all the different types of terms in restaurant financials. I mean, you look at all these for revenue, cost, profitability metrics, operational. There's a ton, right? There's 5 pages here of different acronyms and that kind of thing. So it can be intimidating that way. Then you throw in the numbers. What's it all mean? How does it all come together? That type of thing. So really, to keep it simple, really, we know that our point of sale systems can give us a lot of insight with the data. Our daily sales reports, our invoices, our credit memos, our payroll records, all are in our point of sales. Adjustments like accrued expenses and depreciation can be made as well. So we want to understand what those are. If things aren't balancing, maybe we need to make an adjustment. And then just a place that we are going to have all this information, and then financial statements prepared from the general ledger. So that's where our P&Ls come from. And then understanding where all this information is kind of coming from, right? Our audit trail links transactions to our financial statements. So we can follow the trail if we want to. I don't know why you'd want to do that unless there's an egregious error, but we can certainly find out why something is off if we need to dive in and do that. But for the most part, if you stay on top of your financials, you won't have to do that. Some of your source documents can include, your DSR, your Z-tape, your cash settlements. If you're purchasing are going to have their orders and it's matched up with the incoming packing slips and lists, your invoices, and all the transactions you've made, whether it's credit cards, credit memos, and your ACHs. And then for your labor, time cards, payroll registers, you're going to have all that information. Some examples here. Accrued expenses, allocated annual expenses like property taxes, monthly. All this stuff is already done, going to be in your budgets and that type of thing. We won't have to worry a lot about depreciation, but it's spreading the cost of large assets. So you don't put it all in one year. Maybe you spread the cost of something that's $100,000. You spread it over the cost, a number of months, so that it almost looks like you're financing, which you probably are, unless you paid cash for it. But again, a good way of spreading things out so it doesn't upset your balance of your forecast or your budget. And then making sure that you're doing some auditing and adjusting entries that make sure that that you're accurate for things, because again, key entries, errors can happen, that type of thing. Real quick here, we want to make sure we're using our general ledger if we need to trace numbers back to transactions, if we have to do some type of an investigation. Maybe an example of high meat cost traced to duplicate invoices. Your meat costs for this particular 2 weeks or this month or this quarter were off. and we did a little digging and found out that we had duplicate invoices that were keyed in, and we solved that issue. And then again, staying on top of it just addresses things to improve accuracy and reduce the errors, so that when we get to making decisions on our P&L, we can do that. Key takeaways: accounting really isn't rocket science. It's really logical and straightforward. I don't want to spend too much more time on this, but always ask questions if the numbers don't make sense, and understanding accounting empowers better financial decisions. Another big one that we could help Bob in, certainly if he's answered all the accounting questions, maybe we need to take a look at his physical inventory. Why is it important, right? Without it, food costs on the P&L will be inaccurate. So we want to make sure that Bob's doing the right thing. So this is another area that we're looking at. So if $14,000 is purchased, but inventory changes aren't accounted for, the real cost is going to be inaccurate. So it will differ significantly. So again, maybe we take Bob's Cafe through maybe a couple different inventories over time to make sure they're doing it properly. If they are, then that's not the area. But again, we're checking the areas that could have a dramatic impact on that profit gap that he's looking to solve. So a scenario: starting inventory is at 10, our inventory is at 6, our purchases are at 14, so we know the actual food costs is 18,000. So if we didn't do it that way, we could have made a mistake where 36% of sales, not 28. We could have really underestimated what it could have been. So making sure that we're not only doing the physical accounting, but we're making sure that we're using the formulas properly. So we know the benefits are, if we skip inventory, it leads to discrepancies. It provides excuses for higher food costs. Certainly accurate numbers hold staff accountable. And for efficiency, again, things you may already be using: use shelf-ordered count sheets, assign counting teams for different areas, and then consider mobile inventory apps and that type of thing. I'm going to move over this. We've already talked a lot about that. Another area for Bob's Cafe, maybe we talk about labor cost accuracy, right? Bi-monthly payroll periods misalign with monthly PLs, right? Because bi-weekly, you're going to have it every 2 weeks, but monthly, sometimes we start and end in the middle of the week. So sometimes they don't match. So a payroll, we all know the dreaded 3 payroll months can really reduce that month's profitability because it's got 3 payrolls in the month. I do know that there's many facilities and companies that just go to a 4-week and don't worry about the months. They just do every 4 weeks, and they have they do it on a situation that way better than doing it on a monthly basis. But again, we get lost in that a little bit. So leads to understated labor costs. That's true, right? So if we have 3 payroll periods in 1 month, or 3 payrolls in 1 month, then it certainly could, our labor costs could certainly be higher for that particular month. So we need to maybe look over a 3-month period or a quarter. A solution, again, accrual method to align labor costs. If that's one way, we calculate the daily labor costs and adjust for the additional days. That's certainly something. Or we talked about, again, 4-week accounting cycle. It's easy to align, eliminates the need for payroll. Don't worry about that. We just want to get through that. Another thing is that we want to make sure that we want to speed up our financial reporting. Only in that we want to make sure that everything's kind of done so that we can look at our P&Ls and make decisions going into the future. So when we reconcile, we get a better idea on where things are at as opposed to guessing. So if we can get our financials done for a specific period and move on to the next, we can make those decisions. So we can make it a priority if we can get it faster. Use the end of a period checklist to make sure that everything's done, and then process sales and invoices daily as opposed to waiting, and that way we can get that information back and then estimate missing invoices when necessary if we don't have them or receive them quite yet. Questions, comments here. So it's when we get into a situation where we need to analyze some of the P&Ls, it can feel a little intimidating, and especially for Bob, right? We want to make sure that that we've done the right thing for Bob and make sure that we get into his thing. And at the end of the day, it really was what he was paying for his facility. So that may mean that he needs to renegotiate his lease with the place that he has his restaurant. God forbid that he would have to move it, because you kind of rely on the word of mouth and location, especially long location. So again, the end of the day, all of his other numbers look really good, but it was really his sales per square foot that was off the charts, and it was hovering, at the 14%, well above the 10% that we looked at. So managing with your numbers, making sure that we understand every piece of it, will allow somebody to be able to come in and kind of understand better what's going on, especially if all the numbers look really good. So there's many different variables. We talked about the customer returns and the check and the average check in a couple of different classes. So that's not something we talked about today, but we want to make sure that we're taking everything into consideration when we're looking at these types of things. Questions, comments about any of that stuff? Okay, let's move to a couple of different things. So I've got who needs to, I've got the list up here, and I can pull it out. So who still needs to present their class project for today? I've got the names up here. Natalie, do I have you ready to go? No Natalie today? Christine, were you able to get your stuff done?
I do.
Are you ready?
I am.
The floor is yours.
All right. So I work with a lodge that the college owns north of us here, and we're
Okay.
actually making a bigger project out of this than just the simple presentation that I'm giving you today. But
Yes,
we're
ma'am.
looking at the cost of the breakfast foods and the breakfast menus that we provide to our overnight guests. So it's a lodge. We have the cost of breakfast built into our overnight rental rate. And then in addition to that, we charge $12 per additional guest beyond 4 persons per suite. So basically, the bottom line is we want to make sure that the cost of ingredients for the breakfasts that we're providing does not exceed 33 to 35% of that $12 per person. So we are updating all of our menus and collating a list of menus that the staff will be using over the next season through the summer months. And we're reworking all of our current menus as a result of some of the research that we have been doing in the last month to benefit this. So basically, I'll just present to you the data that was collected over 2 of our buffet menus. And we discerned that the total cost of ingredients was $3.98 for the first menu that was reviewed, which placed the value at about 33% of that $12 that we charge per breakfast. The second buffet menu that we looked at came in at a little lower cost than that, bringing the score to 29% of that $12 mark. It was $3.53 per person was the cost of ingredients. Now, after the costs were provided to me and I looked through it, I did discover that there was a little bit of missing data for items such as jams, peanut butter, ketchup, some of those incidentals. So we are working at collecting that information now as well. In hindsight, it's a little more difficult to get the information than it will be moving forward as we're planning more appropriately to look at the data for that. But this actually was a helpful exercise, and hopefully it will help us fine tune the menus that we're using for our breakfast. It's also going to provide a little more consistency with what they are providing to our guests.
So just to make sure I got the numbers. So $3.98 represented how much percentage?
So the $3.98 came in right around a cost percentage of 33%.
33, okay. And then
Yep.
the other one
And
was
then
353 and 29%.
correct.
Is it and
I don't
and
know
to
that that's right.
and say again?
No, go ahead.
Yeah, look, okay.
Those
To
numbers I
your
think might be slightly off.
That's right.
Is right?
You could have lied to me and I wouldn't have known the difference.
Well, I think we're a couple of percentage points off. Certainly we will be once we look at adding in the additional costs of our jams and peanut butter and ketchup and that sort of thing, but
Yeah.
I was surprised, to be honest with you, at how the numbers came in. I thought that we were spending more per person than what we actually are for the food costs.
For
So I
sure.
was-
Adam puts in there Q factor. You're right. You're probably going to have some sort of, and I'm going to guess it's probably not going to matter. It's going to be the same for both scenarios. Am I wrong there?
Both scenarios.
Both costs. I mean, you're going to add the same cost to both your scenarios there.
Yes, so we offer both a buffet option as well as a plated option. And one of my goals in having Mandy go over the cost of all of this was I'd like to more clearly determine which one is more cost effective for us, the plated or the buffet. And so initially, the data that I received from all of this represented several of our buffet menus. They are now gathering the data for me for our plated menus. I suspect that our costs are going to be a little bit lower when we plate than when we buffet. I think we lose quite a bit of food through the buffet. So I'm going to be interested to see how those compare.
Wow. Awesome. Who has any questions for Christine? Great exercise. Christine, great exercise.
Orange juice, drinks.
Milk.
Say that once again. I missed that.
I was just wondering if that included like coffee and orange juice as like the whole package, which it does.
Yeah, it did for the breakfast time period. We actually provide coffee service starting at about 7:30 in the morning, so prior to breakfast, and it did not include the cost of coffee for that time period prior to when the guests enter the dining room, but it did include the cost of the coffee that's served once they're in the dining room.
Christine, I would imagine over time this process of analyzing this will get easier and faster for you guys now that you're looking at it.
Yeah, it will. So we already had a pretty good idea of overall costs, but there's been a little bit of leniency with the menus that have been provided to our guests, where a certain amount of product was purchased and then a staff member could come in and kind of choose what they were going to make that morning for the guests. And I want to get away from that and have several approved menus that they're strictly working from. And so that's part of my goal with choosing this project.
Nice. Anything else on that? Very good job, Christine. Thanks for sharing. Glad we waited for that.
How many people do you guys have in like a week there usually? What's like how many peeps?
Sure. So it varies considerably. So during the summer, we have typically 4 to 5 nights with full occupancy. We have 10 suites. And so probably 20 guests at least a night for 4 to 5 nights. This time of year, we actually have very few guests with the weather. So a good month for us is only being fully occupied on the weekends during this time of year. So it varies a whole lot. The maximum occupancy per suite is 4 people. So the most that we would have at any breakfast would be 40. But it's very, very rare that we would have that. When we're serving breakfast, it's more typically, when we have a full house, more typically around 20-ish, sometimes 25.
So how do you forecast? Are you looking at just historical data to do your best estimate for prep and stuff like that, or how do you look at that?
Yeah, so what I asked her to do was to look back at the last 3 months and take several of the menus that they have used multiple times over that period of time and get the cost for the ingredients. And so the data that I actually shared with you today was gathered from guests that we had in January, 2 weekends.
Oh,
So that was a very recent data, but we actually are collecting data for a longer period of time and then projecting forward. Typically what we have been doing is if we have 10 or fewer guests, we'll plate the breakfast. If we have more than 10 guests, we'll offer a buffet. Excuse me. And one of the reasons for that is limited staffing. But my guess is that we're losing money by offering the buffet. And so I'm wanting to move away from that a little bit and get a little closer toward doing the plated. And maybe having a little higher number as our cutoff for doing buffets rather than the 10, maybe moving up to 20 or something to that effect for buffet.
What's the downsides of plating it all?
The staffing that we have available. So we're located in a very remote area and we have very limited staff that work for us and even fewer that are of the quality that could provide a meal for our guests. So we just don't have the qualified staff to really present the high level of product that we would want to present consistently for doing plated for everybody. Having said that, we're looking at the possibility of hiring an additional staff person that would be primarily breakfast only. And so then we'd be able to afford to provide additional training to them. So that would really kind of be their wheelhouse. In prior years, we actually had a full-time chef on staff, and then we provided additional meals, including dinners. And on one hand, that was certainly beneficial to the guests. On the other, we just were never able to even break even on the cost, the staffing costs, and especially for the quality of chefs that we tried to hire, the cost just too significantly exceeded what we would bring in.
Wow. Awesome stuff, Christine. Thanks for sharing. Appreciate it. Appreciate your time on that.
Thanks for sharing. Appreciate that.
Yeah, you're welcome.
Good stuff. Natalie. Yes? No? Okay. I'm still on the hook. I'll find you. I will find you. I'm going to take quick attendance so that I know that everybody's here. So just give a holler if you're here. If you're here. So here we go. Suzanne.
Here.
Christian Castillo.
Here. Here.
Wait.
Here.
Christian Clifton. Tammy Cole.
Here.
Nate Foster.
Here.
Kristen Fox. Kristen.
She's on vacation.
Got it. Ricardo. I thought I saw Ricardo.
Here.
Yes. Todd. I think I saw Todd.
Yep, he's here.
Thank you. Natalie's not here. Tony Gross.
Oh,
She's here.
yeah, I'm here.
Thank you. Adam's here. Christine's here. Kilson. No? Kilson?
Here.
Gotcha. Thank you. Jennifer King on chat since she's here. Betsy.
Betsy's here.
She's here. Got her. Gustavo.
Here.
Henry.
Annoying me.
Henry's here.
Henry's here. Excellent. Alea.
My fingers now.
Here.
Jamie.
Here.
Evan Randall.
Here.
Leanne.
Here.
Rihanna.
Here.
Sophia.
Here.
Michelle.
Here.
John Schneider.
Here.
Lacey.
Here.
Aaron Tracy's here. Janelle's here. Cayman.
Here.
Did I miss anybody? Only absent really I had was Natalie and Christian and Kristen.
Chrissy, yeah.
Chrissy. So Chrissy, Natalie, and Christian Clifton. Who's got questions about anything else today before I let you go? Next week. Go ahead.
I was just going to say that we're busy with events this week, so a shorter class is great. But exam next week.
I aim to please. Let me put it up for you. I have. Yes. We'll do a little bit of review of this. Well, we'll do some review of the supervisory skills, but our Serve Safe Food Manager, please, this week, just because we want to make sure anybody that needs a Spanish speaking exam, let me know either by text or email. So let me know if you need a Spanish, the exam in Spanish, let me know and I'll set that up separately. Only in that it will be the same exam time, but it will be in Spanish. So just let me know so that I can get that done and we'll go forward. Aaron, I'll answer your email here coming up shortly. Because I'm just getting back from California yesterday and trying to catch up. And I know you have an email. Anybody else have information that they need me to get
Tom,
to them?
I've
Yes,
got a
go
quick
ahead.
question for you. This is Chris Healy.
Yeah.
I'm not going to be able to be here next week. I'm going to be out of town. Is there a way for me to have an alternative time for taking the test? Is it something I can do online or do we need to do it in person? How would you like to work that?
Yeah, so for everybody on the call, for any makeup or retake, so whether you've gonna miss like Chris is, or if you have to retake it because you didn't pass the minimum standards, is that once the class is completed, we'll set that up. I'll come in and what it's gonna be, some people will take the alcohol, some people will take the food service, the CHS, whatever needs to be made up or retook, I'll set that up with you. We'll set aside a time. I'll work with Aaron and Adam to make sure I have the room available to be able to do that. But no worries there. We'll make sure that we get that handled. I'd hate to have you go through all 12 weeks and not be able to have an opportunity to get all 4 certifications.
All right, thank you.
If need be, if it's just you, Chris, that needs it, if Tom's okay with it, you could take it with me. I am a proctor if that's helpful.
Yeah, Chris, the only thing,
That'd be
Chris and
great.
Adam's right. It has, this particular one, the food manager has to be proctored, that, the alcohol and the CHS. The initial one, the gold service, that we can set up online. But these 3 have to be proctored. I know, you guys are honest people at Hillsdale, but that's just the rules.
Yeah, and
Sure,
I'm only
if Adam would,
manager,
sorry,
not
Adam.
the alcohol. So those ones would be separate, but I could do the manager one if
You
needed.
could do the manager one. Okay, so that could be an option, Chris.
Okay,
And
yeah, that'd be
also-
great.
Oh, go ahead. Good.
My emotion on that.
I just was gonna say on Monday next week at 2:00 in Grucock Dining Hall, I'm gonna do a review before the test on the 17th. If anybody wants to join, anybody's welcome.
Nice.
I just have a little Kahoot kind of. We'll just go through a bunch of questions, and then if everybody gets them right, we'll go to the next one. If we've got some people with questions, then we'll review them. So anybody's welcome. 2:00 on Monday, the whatever that is, the 17th? No, the 16th.
16th.
Yeah, so that'll be. I can send an email if you want to. That'll just be in the dining hall after lunch is done. We'll start 2:00.
That's awesome. Thanks, Adam.
What's an ideal study guide for this? Is it well, I took the test, but
Yeah, the online test isn't bad. If anybody needs some review stuff, I've got some different things too. Come see me.
all right. Thanks.
We do not need our laptops next week, correct?
Yes, you will.
We will need laptops. Okay.
Laptops. You can take it with a mobile device. It's harder, but you can take it. So
Okay. We will be in Gillespie conference room. It's overlooking the parking lot here at the hotel. So I will try to get some laptops, like 3 or 4 for people who don't have them, but hopefully everybody has some kind of device to take the test on.
So 3 classes left. So next one's in person, one following that's virtual, and then the last one's in person. And like I said, I'll answer your email and get the schedule out to everybody. Go ahead.
Oh.
No?
We're good.
Okay. Folks, if that's it, no anything else other than that, have a good rest of your week and hopefully you can get back to the activities. Thank you so much.
Thanks.
Thanks.
Bye.